Good afternoon, folks. Joe Baker with Trade Pilot Pro. Hope you all had a wonderful and enjoying weekend. We're going to be doing the recap of what happened on Friday and then get into Monday's levels. Okay, what we got here is we have a little loss of momentum to this upside. And if this breaks above this trend line to the upside, then we could get some movement. And if you go back and look at I believe it was Thursday night's video, I was showing you how our auto forks were kicking off on a daily, showing that we should be making, now this is should be making series of lower highs and lower lows. So we had kind of a consolidated range on Friday, and we have still that larger area in effect. This is a half a day time frame, which I usually divide that in half. Gives me a little bit smoother, a little bit better picture. I use the daily as well, but the daily is fairly the same because we didn't really have much of a move on Friday. So I break it down to a half day range. And what we have here, I don't know if you're going to be able to see this once this video is produced in the smaller size, but we do have, I'll just outline it with this cursor here. We do have this uptrend channel that is in effect, okay? However, we have this mini channel that has formed within this upper channel. Now it is below the lower parallel, which shows me that the 1302.75 is going to be a kind of a key number for Monday's trading range. 1302.75 brings us back in this upper range, and we could get a little bit of a run. And again, I'll be going over the intraday levels in a moment, but we could get a little run up until the 07.25, 13.12.50, up to 13.15 if we do get a breakout to the upside. However, the money flow is kind of climbing. However, we're losing momentum. So again, more divergence, and as we know, this market is failing to break out and failing to break down. So I think it's going to frustrate the bulls and bears alike, and I think this market should be traded, traded actively, like we do the intraday, and capture the moves in between the levels. That's what we have been doing, and we've been doing it fairly successfully in the room. So that's what I feel may continue to happen. Again, we do have this conflict with Russia and Georgia, and we'll see how the market reacts to that. Whether it reacts negative or positive, who knows? Again, we don't like to trade on news, as you always know. I caution that because a lot of the news is already priced into the market. By the time we know it, it's typically not worth knowing. So at any rate, again, we're losing momentum on this climb, albeit the money flow is increasing. And again, I just for the sake of just repeating myself, it's just a market that just should be traded. And if we do get a break up to the upside, we know where those targets are. If we get a break to the downside, we know where they are. Just take it as it comes. This market's going to, like I said, I think it's going to frustrate the bulls and bears alike. Okay, let's get over to the pivot levels for tomorrow. Just one second. Okay, here we are. The line in the sand is 1301.25. Again, I'm looking for higher levels above 1301.25. And we have a breakout and a pivot at 1304.75. So that would be a breakout and a pivot. Now remember, the breakout levels are pivots. So the market can trade to them, and those are pivots as well. So that line, when it's a breakout, is also, it's an important level. It's also a breakout. So again, 1304.75. We have 1307.25 just above 1307.25. We've got 1312.50 with a target of 1315.25. Extended break 1321.25 to the upside. Now, below the 1301.25, we have 1298. Breakdown at 1294 and a quarter. We have 1292.50. Now, remember, my line in the sand on Friday was 1294. Go back and look on a 5-minute chart at 1294 on Friday. That level held, and boy, did it ever hold. I also overheard some people on CNBC talk about the 1392 and how they were going double long there. So I don't know whether that's a setup. I have no idea. I don't have. I'm not a conspiracy theorist, but that 1392.50 I've mentioned all last week. I'll continue to mention it until it's taken out. That the 1292.50 is going to be one of those areas that is going to be, I think we'll see some heavy liquidation once we break. So just be careful around these areas. This 1294, this 1292.50. I want you to be very careful, be very cautious. Make sure your stops are in around this area, please. This is an area that is, it's just been one of those tough areas, just like that 75 area, that 1275 area I mentioned even earlier in the week. Just go back and rewatch those videos and look what happened the next day. I think it will really help you understand what this market's doing. It's creating a consolidated trading range, and we're going to get more and more areas that are going to be stronger, and then eventually we're going to pop out of here to the upside or the downside, but we're just going to have, it's going to be tougher trading. So again, 1292.50. Then we've got 1288, another area that's becoming stronger as we keep trading around these areas. And then 1283, and it just happens again. That's another strong area. So again, be careful around these areas because you can get bounces. So be quick to take your profits is what I'm saying. Once you touch these areas, this is where the market can tend to bounce pretty hard. So again, as we consolidate, we build pressure, okay, cause and effect. We build pressure as we consolidate, and the market can pop a little bit stronger, a little bit faster around these areas. It's just going to make it a little bit more difficult to trade until we bust out of here to the upside or to the downside. And again, just go back and look at those downside targets. I think I put them on Wednesday's video of all the big key major areas if we do tend to break out of an area, and then you can watch the closing price is what's most important, and then we get into different channels. Okay, folks, I hope this helps, and I will be speaking with you Monday after the close. Take care, and have a wonderful trading day.